Ladies and gentlemen, welcome back to the channel. Here in this video, we will be going over all of your breaking news today for this market. Despite what you see from the headline S&P, it's actually very much a risk-on day for a lot of stocks in a lot of different areas. Like even the Russell is down 0.6%, but there's a lot of stocks that are actually doing very well today. So we will discuss that here in this video alongside some new tariff threats from Trump, a 15 to 20% baseline tariff, including a tariff deal with Europe. So if they come to a deal with Europe, there's still going to be that baseline tariff according to Trump. Now, I'll tell you right now, TLT actually did not move at all. So bond investors didn't really care. That's kind of a green light for Trump. We'll discuss that here in this video. I also want to share a clip with you from CNBC from one Wall Street folk that thinks the SPY will end this year at 700. Like, they're just talking dirty to me now, because that has been my view for months. Back, in May, I was talking about the S&P to hit 700 by the end of this year. At that time, it was like a 25% rally we needed, roughly around there. Today, much different, okay? Today, to get to 700 by the end of this year on the SPY, you only need like an 11.5% rally. So it's not as crazy of a statement now as it was when I first said it, but you're starting to see more of Wall Street growing more bullish on this market. And I'm really excited to share that clip with you as well. So hit that like button and subscribe to the channel if you have not done so already. Ladies and gentlemen, check out the link down below in the description of this video for the trading community. If you have not done so already, the best community in the world by far. With that said, let's get started. Now, in the news today, we did get building permits that came in at 1.397 million, pretty much in line with estimates. Housing starts that came in at 1.32 million, better than the expected 1.30 million. Wall Street doesn't care about that all too much. Housing starts month over month came in at positive 4.6%. Last month was negative 9.7%, and the forecast was positive 2.7%. So again, Wall Street doesn't really care about that. Michigan consumer sentiment came in today, and here's what's fascinating. There's only like 200 people that run this survey, like respondents to this survey. So it's statistically, like it should be statistically unimportant, but Wall Street cares about it. Okay, so the headline number came in at 61.8. The estimate was 61.5, and last month was 60.7. So it came in better than expected on the headline number. 5-year inflation expectations were expected to hold steady at 4%. They came in at 3.6%. So much better than expected. Consumer expectations came in at 58.6. The estimate was 55. So that was much better than expected. Current conditions came in at 66.8. The expectation was 63.9, so that was much better than expected. And 1 year ahead inflation expectations were last month at 5%. They were expected to fall to 4.7%. They actually fell to 4.4%. So, better than expected, current conditions and consumer expectations mixed with lower than expected 5-year and 1 year inflation expectations. And yeah, I'm not surprised that a lot of small caps today are absolutely ripping higher. Like this trading community portfolio is now up 76.74% year to date, having another monster day today. Now, American Express reported earnings today alongside companies like Huntington and 3M, but American Express is one of those companies you want to pay attention to. Always when it comes to earnings, when it comes to the economy. Like this is going to give you a much better understanding of how the economy is actually doing, kind of like Walmart, right? Forget the economic data that comes out from the government. Listen to what Walmart says. Listen to what American Express says. Listen to what other credit card companies say. Okay, that gives you a lot more insight to what's actually happening in the economy. Now, American Express earnings show healthy spending, including on these fancy categories. Amex saw 7% growth in spending last quarter. Spending on front of cabin plane tickets and high value lodging transactions was up even more than that. So, I mean, it had good earnings. It says overall spending growth showed remarkable resilience, he added. And Amex added 3.1 million new cards to its franchise in the quarter. Revenue, meanwhile, grew 9% to 17.9 billion, topping the FactSet consensus of 17.7 billion. Amex recorded earnings per share of $4.08, down 2% from a year before, though the company said the EPS would have been up 17% when backing out a 66-cent per share gain from a sale of part of the business, which was factored into the prior year's EPS figure. So, yeah, spending looks fine. Doesn't look like we have any kind of recession on the horizon, at least for now. And we can all say, yes, people spending on credit cards is not exactly great, but it's spending. That's what matters. Now, before we get into the rest of the information that we need to talk about in this video, I do just want to give a quick shout out to the trading community and give you a rundown of what we are doing over there. If you are interested, check it out. Link down below in the description of this video. But what we are doing is something that nobody else is doing. From my understanding, nobody else has ever done before. And that is, we are going out and finding small cap stocks with value that Wall Street does not know about yet, okay? I've been doing this personally for the last year or two. I've found that this is a winning strategy, okay? It takes a lot of work. It takes a lot of time, okay? You got to be a real nerd to do this, right? But even in the last 12 months, for myself personally, I bought IONQ at $7. Today it's in the 40s. I bought Novartis Semiconductor before the partnership with NVIDIA at $2. Today the stock's $8. I bought Applied Digital at $3. Today the stock is $12. I bought Nebius at $17. Today the stock is in the mid 50s. Okay. I even bought HIMS at, $17, $20 in that range. The stock obviously went up to the 70s. So we're finding these smaller cap companies, finding the value that Wall Street is missing and just waiting. That's all you have to do. Once you find a good opportunity, is wait for Wall Street to figure it out. Wall Street will figure it out eventually. And some of the opportunities that we are finding in core themes for the next decade, like AI, energy related to AI, robotics, all of the biopharma, some of these opportunities are incredible. Like I can't believe we're still finding these kind of opportunities. I put out my due diligence. I share my positions, how big I am in a certain stock or what the thesis is. And these trades are really with like a 12, 24, 36 month time horizon. I don't have like a hard stop on these. They're not just a month. They're also not 10 years, right? They're kind of a medium term outlook, and we're going for 10, 20, 30, 40, 50x stocks. And really, by definition, if I don't think a stock is like a 10x opportunity, then I'm really not investing in it, because I think there is so many 10 plus x opportunities that I'm not going to waste my time with a stock I think can double in the next 2 years. I know it sounds crazy, but with this strategy, it's unique, right? And that is what we are doing, to say the least. Check out that link down below in the description of this video. I do make a lot of earnings trades as well, so if that is something you are interested in, again, link down below in the description of this video. But with that said, back to the episode. Now, Donald Trump is pushing for a 15 to 20% minimum tariff on all EU goods. Fed Waller says, if the president asked me to do the Fed chair job, I'd say yes. Fed Goolsbee says that rates can go down a fair bit over the next year. Fed Daily said last night that 2 rate cuts this year is reasonable, and that is what the markets are roughly pricing in. Fed Goolsbee says, I'm a little wary as the latest CPI data shows tariffs pushing up goods inflation. House China Panel Chair Molinar faults Trump's move to ease NVIDIA chip sales, seeks Commerce Department briefing by August 8th. Again, the idea here is, if NVIDIA doesn't compete in the Chinese market, then Huawei, or Huawei, I think is how you actually say it, is going to dominate the entire market. Like, you lose. You don't let NVIDIA compete, then you lose the market. If you do let Nvidia compete, then you're letting China compete with the US for AI. Like it's a lose-lose. I mean, there's no, I guess, easy answer. The only thing we have to do, if you're in America, if you want to win the AI Cold War, which this most definitely is innovate, create new products, create better products at cheaper prices, and foster more mainstream adoption. One of the reasons I'm so bullish on this market, among other things, like I'm not going to say this is the only reason I'm bullish. I'm bullish on a lot of things, but it is the AI Cold War. All big bull markets happen because of a new innovation cycle, like the internet, right? Massive bull market that has really led us up until where we are today. This time it's AI, and Cold Wars really just mean competition. Okay, as long as the geopolitical tensions are not too high, as long as there is not an actual war, a Cold War is great for innovation. It forces companies and countries to innovate rapidly, okay, so they don't lose to the other guy. That is what is going on right now. And it's almost like we have an internal AI war going on between companies trying to outbeat the next company. But then we have this Cold War going on with China, a whole separate country. And that is going to drive this market substantially higher in the years to come, because AI is going to get bigger, better, faster, more adoption, adopt or die, essentially. And yeah, that is very bullish for your portfolios. And that is where specifically I see a lot of opportunity in some of the smaller cap AI names. Like, this is a revolution, something in which you have not seen since the dawn of the internet days. We're back. We are so back. And apparently today it's being reported that Trump's appointees requested more marble for the Fed renovation. So potentially why it was running over budget could have to do with that, which kind of eases some of the pressure maybe on Powell potentially getting fired. U.S. Department Treasury Secretary Falkender says one should question why interest rates are so high. And he says the U.S. Treasury wants Trump to cast a wide net for the next Fed pick. He also says that crypto rules further cement the dollar as the standard. The IMF, that stands for International Monetary Fund, says we have seen strong evidence of front-loading ahead of tariff increases and some trade diversion. The IMF on inflation says cooling demand and falling energy prices point to a continued decline, albeit with variation across nations. The IMF says since April, economic indicators reflect a complex backdrop shaped by trade tensions. And the E3 and Iranian diplomats are expected to meet in Europe next week to negotiate some kind of nuclear deal, or at least set the framework for that. And the Fed says the economy has rebounded from trade war lows. The Atlanta Fed GDP Now index is unchanged on the day today, despite having economic data. That's actually a good sign. The Q2 GDP numbers are running at 2.37%. Fed Waller said, I'm not seeing longer-term inflation expectations go up. Fed Waller says, I want to make sure we don't have a hard landing. Fed Waller says some of the cost of tariffs will be passed along to consumers, but not in a way that causes persistent inflation. Yes, finally, somebody gets it. Okay, inflation is only ever a monetary phenomena. Of course, could we see a one-time price increase from tariffs? Sure. If we get this staggered approach where we don't get everything all at once, like trade deals just come and another one comes and another one comes, that could make it a little more bumpy in terms of some of the inflation reports. But tariffs are not going to cause like a 2022 style multi-year inflation spike, right? Where like inflation is a major problem. That only ever happens from excess money supply. Like when you send out stimulus checks, you're always going to get inflation. Always. Okay? When you tariff things, that's not inflationary. That is by definition deflationary, a tax, but it's going to cause weakening in the economy more than anything else. Fed Waller says, I want to look at 3-month and 6-month inflation for tariffs. Fed Waller says it is probably not critical if the Fed waits 6 more weeks to cut, but also no real reason to hold off. Fed Waller says disagreement over monetary policy shows a healthy debate. Fed Waller says, I don't think I could be any clearer on rate position. Waller says if immigration were a big factor, you'd see shortages. And he says that business executives say they are not hiring or firing. It says here the US administration is now looking at a reciprocal tariff rate that exceeds 10% even if a deal is reached. Now let's take a look at this clip on CNBC about the SPY hitting 700 by the end of this year.
500 posting its 9th record close this year. Our next guest, get this, says she sees the index hitting 7,000 by year end. And I asked someone the other day, how's next year look? You're even giving me something for that, Marianne, 7,200 by the end of next year. Bitcoin, 150,000. Wow. You're a wild woman. This is Marianne Bartels is here with Sanctuary Wealth. You are not afraid. You're fearless.
Well, that's after 40 years of being in the business, Joe. I've developed some confidence in the analysis that I'm able to do. And, you were right. You said that, we need growth and AI, and I think it's coming. I think it's going to significantly impact corporate earnings, productivity, and it's going to show up in the equity markets. And Joe, it's not just a bull market here. It's a bull market globally. You're seeing European markets break out. I think you're going to get the Japanese market to break out. It's a global secular bull market driven by all this new innovation, from AI to blockchain to crypto to Web3. And I don't think all of this is yet priced into the market. And you can see we're already in a summer meltup. The market is not positioned for this yet.
That was a point that was made by Kevin Warsh yesterday. I don't know if you saw it, Marianne, that there are powerful disinflationary forces coming from AI. And if you think about the internet, none of us had any idea what that was going to usher in. And if this is more powerful, what happens with AI than the internet, think about in terms of it maybe not just disinflation, but the amount of, I guess if you have growth, deficits and debt becomes less cumbersome. And therefore, there could be perhaps a secular disinflationary trend from technology, which is pretty exciting. But we could have lower rates and not worry about it.
And I agree with that. I do think rates are trending down and can go much lower than people expect. Right now, we're in heightened fear that tariffs are going to bring inflation. And I think over time, especially trending into next year, we can get rates down. And that's going to be another stimulus for risk assets, for the equity market, for the crypto market. And then maybe finally we can get something moving in the housing market if we can get rates down.
Marianne, you didn't start the year at 7,000, did you?
I started the year at 7,200. And when tariffs hit...
Yeah, go ahead.
So when tariffs hit, we did mark down that if we did go into a recession, those targets wouldn't be hit. But since after we went down 20% from the tariffs, we've been raising our targets ever since. And so I'm comfortable getting to year end at 7,000. And I think in the first quarter of next year, we might even be at 7,200. What I learned is that I shouldn't have changed my forecast.
Right. A lot of people, I'm watching crazy stuff happen. They start the year at, sometimes if you don't look at where they were and just where they are, you don't see that they're just almost wherever the market goes becomes their target near term for where they are. So that, we don't need to mention any names. How does Bitcoin factor into that? Because if it's disinflationary, it makes the whole, maybe it hurts the argument for fiat, declining and Bitcoin being the place to go.
Well, with the passage of the Genius Act and having stablecoins having to be backed by short-term U.S. Treasuries, that's not going to hurt the dollar. I think the story and the trash of the dollar is completely wrong. I think the demand for the dollar over time is actually going to go up. And as for Bitcoin, I always call that's the currency that we didn't have when we created the internet. And Joe, we're going to really be transforming, displacing how we actually move money, not just here in the United States, but around the world. The system is going to get a major upgrade as we shift to digital. So when clients ask me about Bitcoin, I said, just think about digital currency. Bitcoin is your digital currency. And Joe, the other analogy that I use for our investors is think of Star Trek. The technology that you see throughout Star Trek is really becoming our reality. From Kirk with his flip phone, and then you had Star Trek, the new generation, and all their consoles were iPad. The communications officer had an earpiece. You had a robot called Data. Well, what was the currency on Star Trek? It was credits. And Bitcoin is a credit on the blockchain. Stable coins are a credit on the blockchain. So all you need to do, Joe, is go back and rewatch Star Trek to know that this is the new reality that we live in.
Okay, how exciting was that? If you guys are not excited for the next 10, 20 years in this market, you're probably a bear, and you're probably going to lose a ton of money. If you are not bullish right now, I'm not a financial advisor, I'm not a financial planner, this is not financial advice, but if you are not bullish right now, I think you're making a big mistake. That's my opinion, not financial advice. Let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. Have a great rest of your day and a great weekend. I will see you in the next one.